The Federal Reserve is hosting a conference in Washington examining the difficulty that small businesses are having trying to get credit. Fed Governor Elizabeth Duke is speaking with our economics editor, Michael McKee. Michael?
Thank you, Pimm, and thank you, Governor Duke, for sticking around and talking with us. I know you've had a long day at this conference, which has been focused on the idea that small business is having trouble getting credit. But I'm wondering how much of a problem that is really for the economy. On a list of their top 10 problems, according to the NFIB survey, small business ranks access to credit last.
Well, even though they don't rank it very high, if you look at those who are having trouble accessing credit, it's actually as high as it was back in the early 90s when we had the last significant credit crunch. In terms of the impact on the economy, clearly small businesses are an engine, a strong engine of the economy. They create a lot of jobs, and more importantly, for many local communities, they are absolutely the engine of the economy.
Well, we heard at the conference a lot of small businesses are anxious to get credit and say they can't. A lot of lenders say they're anxious to give it and can't. How do you bring the two sides together?
Well, what we found out today and what we heard today is it's going to take a lot of very intense communication as well as a lot of collaboration. I think today's conference was probably just the beginning. You're starting to see lenders, for instance, begin to look beyond very first screen of numbers, beginning to take second looks at loans. You're seeing borrowers go to providers of technical assistance to help them better organize their information. So more conversations going on between the borrowers and the lenders. Now,
financial regulatory reform is about to pass theoretically in Washington. Some analysts say banks are going to be downgraded after that passes. Are you worried that that's going to have an effect on lending?
Well, right now we think actually the bank situation is getting better all the time. As the banks work their way through their credit issues and through the credit costs, they're starting to turn their attention to new lending and to growing new lending, and particularly to growing business lending and small business lending. So we're beginning to see the signs of some early competition for these loans.
How about the general economy and the general state of credit availability? Are you satisfied with where monetary policy is right now?
Yes, I am. I think we're in the right place. We are seeing moderate growth. We're seeing subdued inflation. There are a lot of reserves out there in the system. And so part of what we're trying to do now is understand what are the barriers to have those reserves get into the economy in form of loans. We don't think the barrier is that there's not enough money out there.
Well, if there were some well, there have been calls for the Fed to do more. If there was some reason for the Fed to do more, is there something you can do that would be effective?
Well, there are still things that we can do, although I would emphasize that at this point there are no plans to do them. But, we could do things in terms of our communication. We still have the interest on excess reserves rate is at 25 basis points. Certainly you could lower that as mortgages, as some of our securities, mortgage-backed securities and Treasury securities roll off. We could replace them by buying new ones, or we could actually increase the amount of assets that we own. But I would emphasize that there are no plans to do that at this point.
I'm just wondering if you're in danger of pushing on a string. You've got rates so low right now that you'd only get incremental gains.
Well, I think we have to keep looking at what the situation is in front of us, and we have to keep paying attention both to current economic conditions and where we think that they're going. And we will take whatever action that is necessary depending on how conditions evolve.
And a fair point you have made. You don't see those conditions right now. Thank you very much, Governor Elizabeth Duke from the Federal Reserve, for joining us today. Going to send it back to you, Pimm.
Thank you very much, Michael McKee, our economics editor.